Alright, so today I'm going to be breaking down how I managed to make 6% from my last 2 trades. Now this happened around a 4 or 5 trading day period, and you're really going to be seeing the kind of setups that I'm waiting for in these current market conditions. And me and the VIPs are playing it the exact same way. We don't want to convince ourselves of a setup, we want the setup to convince us that it's worthy of taking. So without further ado, without further waffle, let's hop straight into the charts to Friday, where I took this gold setup. Now, some of you who have been on this strategy for a bit longer may be wondering why I took this at a 1 to 3, and that's something that I will get into, and was a great choice because as you can see, we just fully reversed after the fact. Now, as you can see here, over in the Discord, I did take this at the 1 to 3, and I explained over in the main trading chat why. Now, this all comes down to how gold likes to act specifically. Gold is going to be a bullish instrument, meaning it's going to be going up more than it's going down. Over recent markets, it seems like it's just very, very bearish. You know, we've been kind of shooting down, but you can't base things like that over a small sample size. You need to look at the long term and see what the instrument likes to do over a longer period of time. So since we know that gold is a bullish instrument, I decided to take this at a 1 to 3 risk to reward. I don't expect it to keep shooting down, although if we do look at market structure over to the left, it was looking like a high potential that it would. If we look at key levels, we're not pushing into any key levels over to the left at the bottom of our move. In fact, we broke into clear space. And if we look backwards at these highs, we can see that we are rejecting off of a key level perfectly, meaning that we're likely just going to continue downwards. Now let's break down a few more things that were really clean to see in favor for sells. The first thing being the zone itself. Now it was backed up by a bit of consolidation, but the main thing that made this zone so clean was the fact that there were no valid zones above it. If we look behind it, none of these are valid to trade off. We don't take accuracies, so this wasn't a valid zone to trade off up here, meaning this would be a great continuation zone since it's also the top zone, which is essentially just the best price that supply and demand investors can possibly get. Therefore, that was just a great thing to see first. After that, obviously we have our liquidity. This is a valid swing of liquidity at these 2 candles just here. But considering how big the overall size of the setup is, this swing just here was what I mainly had my eyes on. And we also have more liquidity down here. We really do have loads of liquidity, so that wasn't the issue with this setup. Well, there were no issues with this setup, to be honest. It still hit that 1 to 3 that was predetermined. After we made this liquidity, we managed to break lows every single time. Once again, like I said, breaking into clear space. This essentially just means that we're not rejecting off of an area where we expect to go bullish from, which just leaves less in the market going against us. A lower chance that, you know, we're just going to shoot to the upside randomly. Now, after we get these clear levels of liquidity and that great break of structure to the downside, the movement towards zone was relatively straight. I mean, there were multiple times where we kind of get these swings, but they're not major swings. They're not anything that convinces me that, you know, this is bullish market structure to the upside. It just kind of looks like choppy price action. Nothing that's not tradable. It's just something to keep in mind. Once again, if you know the strategy a bit more, we do have potential rejections off of a supply zone below us. If I was to mark this out, we get this huge wick and then we close bearish. But then we just continue to the upside. You know, we don't shoot off to the downside from here. It's not as clear as some other setups, but it still is definitely valid. It's essentially just normal supply and demand traders getting into their zones off of an invalid zone or a very low quality zone, putting their stop losses, you know, somewhere up here, likely at the top of this swing, adding to our liquidity when they finally just get stopped out. Bit of a quick breakdown on that concept, but I do explain it in almost any video. So if you don't know about it, then just go and watch any of my other videos. But after that, we come up to our zone and I don't enter straight away. I didn't enter off of the first directional close or the break of candle or the second directional close even, because that new high time frame candle was coming up. And this could have been a great example on why exactly I wait. Essentially, every higher time frame candle is going to have significant upper wicks and significant lower wicks, since if you were to go into a higher time frame, we would see that every single candle has big upper and lower wick. Therefore, once we make one of these new higher time frame candles, if we predict that the market is going to want to go downwards, then the market wants to make that upper wick first. And by waiting, we can see that the market did in fact want to make an upper wick, which came up, retested the zone, and then we finally shot downwards. And thanks to all of our entry models, we don't get a terrible entry. We don't need to wait for the directional close. On a new higher time frame candle, we can get a flip entry, which is essentially, for a supply example, when we flip from bullish to bearish. We go bullish to make that new higher time frame upper wick, obviously, And then once we flip from green to red, we take our entry with our stop losses on the deepest wick inside of our zone, like I'll always say, and our target TPs at a 1 to 3 risk to reward. The only time you're going to see me take anything for more than a 1 to 3 risk to reward is for gold buys. And that's because it's a bullish instrument, so we can expect it to run more than any other instrument. And waiting for a 1 to 4 risk to reward on that is essentially just trying to take more money when it wants to be given. It didn't want to be given in this example. As you can see, we run straight down to our take profit, and then we just continue going upwards. Although we have market structure, it's just what gold likes to do. So we prepared for this in exactly the way that we should. We didn't just skip the setup entirely, but we changed our predetermined rules so we can still cash out when the market doesn't want to give the full TP. It's not breaking our rules, it's just going off a bit more market knowledge. And I'm pretty sure most of the VIPs did this. I know some people still did try and take to the 1 to 4s, which is completely valid to do. Market structure was once again so in our favor, but maybe something to journal, maybe something to change for next time. And I think that's something actionable that you can go and back test, or at least forward test in the next gold supply example. Anyways, so that was Friday. That was last week, Friday. And the next trade happened on Wednesday of this week, which is the Easter week for anybody watching a bit later on. Now, if we look over here on ES, or the S&P 500 over on the Wednesday, this is honestly the cleanest trade that's happened in a while. There's nothing specific, nothing particular that's made me feel that way. It's just kind of an accumulation of loads of different things. And if we look to the upside, the market also felt the same way. Now, like always, let's just break down everything I saw. Coming into the market, we're very, very bullish, only making higher highs. We're not breaking any lows to the downside. And if we are like this minor low just here, we go on to break highs straight after. So we're clearly bullish. After that, there is a very clear area of demand straight after, with the zone formed on a swing. If we're going bullish, then we don't expect the market to break any lows. Therefore, the fact that this zone is formed on a swing means that there is a much lower chance that the market just wants to break to the downside. If we've been going up for this long, why would we just make bearish market structure now? And after we make this very strong zone, we then get a great level of liquidity. Another really, really small level of liquidity just here. I'm obviously looking at this entire accumulation of liquidity with clear breaks to the upside, also breaking any potential key levels over to the left. We break this minor swing just here and this relatively major high just here, therefore confirming that we're just going to continue going upwards. Now, some people may have been put off by these really random high volume candles, but all they've really done, if we just break it down to the basics, is break highs. Yes, only with wicks, but they didn't invalidate our zone. They've done nothing to really affect the trade at all. So I really wasn't put off by this in the slightest. And other than this one really random bullish candle, all of the other candles in this entire move were either a doji or red, meaning that we're not making loads of swing to the downside, which would be terrible to see because there's a high chance that we just make another lower high and then break through our zone. Instead, we just kind of shoot downwards like this. For another really small confluence, we were rejecting off the 200 EMA, which is great. But for the main kind of takeaway for this trade, it's going to be about capital preservation. Now you're wondering, we just shot straight up to take profit. What is there to talk about? With the UK clocks going forward on the weekend before this, the New York Stock Exchange open was back at 2:30, which, if you didn't know, tends to bring insane volume to both NQ and ES, which is NASDAQ and the S&P 500. Now, something that I personally said I was going to do over in the VIP room, which, if you didn't know, is where I send all of my trades, do morning analysis. There's a lot of experienced traders just talking about what they do just every day in the live markets, which is great to see. But yeah, what I said is that I was going to be setting break even just because that New York Stock Exchange open was coming into the market soon, which was this candle just here. So when we got to 228, I sent that message. I set to break even. Just in case the market wanted to shoot down, maybe retest the zone, we could always get another entry. So it was just a fantastic show of capital preservation. As you can see, what wanted to happen instead was just continue to the upside. Never even came down to break even. So even if you did set, you still had chance to, take a runner. But I rarely take runners. If I'm being completely honest, I just keep my trading so simple. Took take profits at the 1 to 3, therefore leaving 6% up on the last 2 trades taken. Now, yeah, that's essentially everything I saw. I see a lot of people adding a lot of stuff to this strategy, which is great to see. And if that helps you, then keep doing that. I think trading is all about longevity and just keeping it to something where you're not going to hit a losing streak and then keep blaming all of the small things that you've changed. I just stick to all of the proven basics that I know work and have worked for me for so long. There's no wrong way to do stuff if you've back tested and it works. Just to also make sure it works in the live markets. Anyways, bit of a short one, but once again, that is just the last 2 trades I've taken. If this helped you in any way, like and subscribe. And if you don't feel like you're ready to join that VIP room yet, that is completely fine. I also do have a free Discord, just so you still have a place to talk to everyone everybody that is on the exact same path and strategy as you. So I at least hope to see you in there. Peace.